Greetings, market rebels, and welcome to this week's sector situation combined with macro measure. As you can see there, I'm extremely frustrated right now. I spent quite a bit of time on a longer video. Let's see, on Friday, which was August 30th. It's now Monday, September 2nd, and it's a little after 9:30 a.m. here on the East Coast. Very frustrated, Wayne. Trying to really come back with a combo video again, but I'm even getting mouse issues. For some reason, no audio. Audio test was fine, but for some reason, the audio wasn't captured. And so here we go all over again a few days later. And I'm going to have to do more of a highlight video of than what I planned. But we'll do the best we can to get the second recording done. Trusty disclaimer. There you go. Mouse is doubling up on me nicely. Boy, trusty intellectual property rights notice. Technology sometimes really can get you a little frustrated. That's for sure. Here is the selective review of the prior week. And I'm going to leave that up there. And I would say if you want, take a screen cap or screenshot or whatnot. Going to just try to go through these quickly and not really point by point like I did in the original video, because I've got my hands full with a bunch of responsibilities today. And I would just put the one reminder and set the speed to 2x. So here is this week's really kind of points. Some are carried over, some are new. A lot of you have seen a lot of these before, but there are a few new ones in there, but I think some are still worth repeating. So I'll try to get into it now. Let's see if I could just briefly pause and then get started with the charts and move this PowerPoint stuff over really as reminders. And let's go with a share of screen four, and that should do it. So we have a chart up. So yeah, so this might be helpful. Like I said, I think I wrapped up around just in front of 7 p.m. on Friday evening, and just it was pretty chock full video trying to cover a lot of interesting things, because I think we are really approaching an interesting juncture, and I just wanted everyone to be ready, because I do think something could change in the next few weeks, but we don't want to get too far ahead. My main message, I guess, would be if we look at things objectively, I don't think there's a lot that we can complain about objectively. There's still some canaries, which we'll cover, like IWM, XTN, XLE. They're part of the notes, but otherwise, right, most things that I would typically look at look good. In other words, like there's a lot of sector participation that's pretty healthy. And it's, even though it's short-term overbought in some areas, and you've got pretty solid, just basic market breadth readings, if you ask me. So what really comes in, and I don't know if this is still there, but it should be, what really comes in is this, which we'll cover right now since we're here, and it hasn't disappeared on me. But this is the AAII survey, and here are your sentiment votes. And you can see that we're typically, right, here's your historical averages. And you can see that we're typically about 37.5 bullish. Right now, you're 51.2. Last week, you were 51.6. That's not very far off the 1-year bullish high. So the complacency argument that we've been making, that you kind of went from complacency to extreme fear, which we I think analyzed at the time, basically, and that just said that type of oversold sort of extreme does often show up in front of a rally, or at least a recovery, a reflexive rally of some kind. And it sure did, this time around, and they sure did rally them. And now you're really back on the other side. Is it extreme? Probably not, but it's close enough that you need to start getting a little bit more concerned about that. And you can see that the bears are pretty much wiped out. So when you see this type of, we talked about the put call ratio and things along those lines. So once again, the market is getting all uh all, well, I shouldn't say all, but very one-sided. And that can work still. Can't deny that, but you just need to, I think, start factoring that into your back burner stuff. It's just in the back of your mind and maybe helping drive your position management. Because if we go to this data right here, the historical part of the survey, you can look back a little further and you can see that these last couple of readings, they're the highest we saw since probably folks were anticipating wonderful EPS reports. And before that, there's nothing right near these. So it's up there. So you've got that complacency. And it happens to come at a time where the reminder here is the VIX seasonality. You can forget about 2023, obviously, the red line, but otherwise, right, you're looking at the CBOE VIX historical, daily level, and you're looking at that for 32 years on this one that I found. So you could see right where the sweet spot is, and we've been noting that the sweet spot would start to appear, and you can see that it really works its way into October. And as they say, right, September is no slouch itself, because you can see that a lot of the ramp happens there. The crescendo happens theoretically in October, at least it has historically. And then, of course, the end of the year markup madness, the window dressing, all the absurd stuff that gets put on CNBC about the Santa rally that they start talking about around Halloween, or it just gets earlier every year. But that's the whole thing right there. So everything's sort of shaping up that way. But again, I wouldn't fight anything just yet. So we'll go back to the charts, and that's not helping me. That is helping me right there. Yeah. So let's see if this mouse is cooperative now. No, still not cooperative. So yeah, I'm just really frustrated. I've got to be honest, just all the problems I'm having with Thinkorswim, the Windows situation, Zoom, the combination just doesn't work well for my computer. But anyway, like, you got this here. You got your gap fill, right? We've talked about that, I think, last week. Got the gap fill, so that's over and done with. We talked about how don't rule out, right, when they started turning this thing around, don't rule out new all-time highs. We got those in the diamonds, and we're very close in spiders, and you can see where that is. So the problem right now is really a lot of folks are bullish, a lot of folks aren't bearish, and you're in the diamonds, you're approaching overbought. Right? You're at 68 on the RSI, if you can see that below. So it's really not let's say extreme, but it also isn't really what I would call getting in on the party early, right? We're not arriving at this party early or right on time. It's probably the party is more or less in the middle of the party or towards the end of the party, in just in terms of the cycle of how overbought, oversold, because you could be there with just a little bit more push. But that's the thing. If you kind of step back and look at this pattern here in SPY, it really does have somewhat of a kind of an inverted head and shoulders type look to it, with a dunce cap head. And if that fires, that could be really powerful, right? Because when that kind of a pattern fires, they often are. And if they don't fire, that can be really powerful as well. So fail to fire situations are pretty powerful as well. So again, I'm really sticking with volatility. I think we were sort of in we got a taste of the summer doldrums that our friend Ron Ianieri, who's passed, he used to really love to use that phrase, but there's some truth to it. I mean, late August, we talk about it a lot. The latter half of August is often really as kind of boring as it was, but I'm calling this a win for bulls at the moment, if I'm objective, because they had this remarkable rally that was nearly relentlessly straight up, very vertical. You can see that just on this view, that's quite a slope relative to the rest of the action that they moved that up on. And yet they didn't give much back, and they're really right there in terms of setting up what I call a base camp, right? Where they're just underneath the key resistance level. And they've done a great job of holding all these gains practically, not all, but you get the idea. And they really have kind of stalled it out and worked off the short-term overboughtness very nicely. So this thing should be ready to go. I would say in a news neutral environment that this thing does go. And I do think I'd be surprised if they're not able to print a new all-time high. All the normal sort of warnings would apply, which is beware of the false breakout. Beware of the breakout and the pullback to form a resistance to convert it to support. All the same things I say all the time, so I won't belabor that. But overall, this looks ready to go, and it does have this. Again, if you're willing to go with the inverted head and shoulders with a dunce cap, you've got a pretty strong argument to make in terms of where this projects to, because even if 50% of the height of this whole thing, even 50% of that tacked on from here would be a pretty strong move. I mean, you'd be looking at 30 points or so. Maybe I'm sorry, maybe it's actually, it looks like it's probably closer to about 27 points, but you get the idea. But that puts you, that really does put you up there. You're at 582, which is somewhere near this 100% fib I've got up here, and along with maybe this resistance line right here. So that is an interesting place to go to. It's possible. I would note that you've got the Apple event, which used to be a big deal. I can't say that it still is in terms of helping Apple, which generally helps the market because of the market cap and just the whole general environment, sort of psychology of what's happening. And you've got the FOMC anticipation. So it's quite possible that the gang could get excited in front of that, which happens at basically mid-month. And then after maybe that initial everything's wonderful situation, maybe you then have trouble once the Fed does cut, because as we've noted many times, the market has a double-digit negative performance after there's been a rate cut if the economy is in trouble. Now, what constitutes that? That would really be a recession. But since they've really redefined the definition of recession, I don't know what it is anymore. I'd have to check with uh, the doublespeak, uh, I guess, department at the of the government at this point to know what a recession is anymore. But you get the idea. So if things are rough, and I did see some stuff that's pretty rough out there, if you go back to your screen cap, I would note that I think I put it down sort of in the middle in red, just added to our many still won't see it coming line. And because I came across stuff that I won't even bother showing just in the interest of time, but autos, home buying, credit card savings, it's all bleak. It's not just bad, but it's bleak at this point in a lot of ways. And so again, I'm not someone who trades off of their economic reports they come across or something like that. I'm just saying that that to me is your background, your back burner stuff that you need to need to keep in mind to not get caught off guard when a lot of people do. And what that really should help you do is manage your positions with discipline, even if you're ramping, right? Even if you see this market ramp. Well, what does that mean? Well, that means that you're a roller. You're not going to get into, let's say, a 70 delta call and ride that 70 delta call until it's about 99 delta and then just keep riding it. You could say, well, isn't that the way I'd make the most money? Yes, it is. But at the same time, with the environment we're operating in the world right now, knowing also that we're approaching this VIX sweet spot, and uh, there's a few matters on the calendar that they may be able to string a rally together in front of you, and then maybe rug pull it potentially. Again, I wouldn't put anything past these guys. You've got to be smart about what you do, and that means, right, once you get to 90 something delta, start looking at 70 delta again. The difference in costs can be significant, and you could take a lot off the table and therefore not give a lot back. Like I've always said, if you give a little bit back on your final roll, meaning you've had several rolls, that is really a good problem to have. And you just don't know when this type of news will hit the tape. So just objectively speaking, I have to say that the diamonds made a new all-time high. We talked about that, I think, just shortly after this bottomed. This could happen. The spiders are, to me, primed to do that again. If you just assume news neutrality over the weekend, nothing really bad gets reported by tomorrow morning, I think they've burned off a lot of the overboughtness and in the short term, and they should be able to run again. They're so close, I'd be very surprised. But again, you never know. Just saying, the odds in my mind favor that they keep trying to push this thing. And then IWM really had a big surge, uh, and they were able to kind of build a base camp in there as well, right? You could see that after the big surge, they kind of chilled things out for last week, and overall, though, held most of these gains, and they're not too far from that recent high, which is not too far from here. And as I've said, I think if the market does find a way to keep rallying this fall, which it could, once you're through 225, your next big target, I believe, will become about 244. That should give us right there. I think that is the all-time high right back here. And that to me is certainly within striking distance. And just as a reminder, because these are notes that um, I've had and covered more in depth on the video that has no audio associated with it for some unknown reason. But anyway, I've got this thing trading up here, sort of between 270, 280. Just because if you start to inflation adjust things, um, and you say, well, given what inflation has been, given how far this is lagging, where should this thing really be if it does finally catch up because interest rates come down? There really is the fabled soft landing they're all talking about. Then suddenly, right, these smaller companies that benefit greatly from lower rates start benefiting from that. They start being more aggressive in their plans for this, that, and the other thing, and the economy starts to pick up some momentum finally. That's all possible. I don't really think that's going to happen, but again, I would trade the chart, not what I think. And so that is a possible scenario that you just absolutely cannot rule out. And I think it's not even really a stretch to say that it should trade 270, 280 because it lags so far behind the SPYs and the diamonds at this point. Now, the other big one, first of all, make sure you're beyond here. You've really got to get through 225 convincingly. The highest high is just under 229, so obviously that needs to be exceeded. But there's room above there from 230 to 244, which is about 7%, roughly 6, 7%. So they could they could have a pretty strong scamper suddenly in this thing. And it's a good trader. I mean, it's a good trading vehicle. It's very reasonable most of the time to trade this. It often ends up as a bonus idea in the Rebel Pit Pro service because it's usually got it has excellent liquidity in the options that are in tight markets, but it also is very reasonable relative to the movement you can get at times, which is a big part of what we try to do in there. Put folks into names that they're getting a pretty good deal at the time to focus on in terms of implied volatility and movement potential. So the way we see it anyway. So anyway, let's move on to the Qs because they are probably the key, right? Part of the key to unlocking the whole situation for bulls. You can see, right, this is almost textbook where you have this very strong rally. You've got this nice sort of on the milder side pullback that I would call a bullish pullback and stabilization. They take some of the overboughtness that they had in here out of the market, not really overbought, but you get the idea. They pull it back, and I think now you're in the mid 50s. Yeah, you're at 55 rounded. So this thing is neutral, and therefore it has a lot of room to run before it gets anywhere close to overbought. It's got this gap fill potential right here. Okay, and the low that day is 493.15, and that doesn't even put you at the highest high. So this is really it. And I could say, well, what else is really it? We could just cover these all at the same time because it's virtually the same look. If you look at XLK, which is a lot like QQQ, just to look at our sectors, you can see that it looks very similar. If I can get the right, you can see that strong move, the kind of milder pullback, and then really close to potentially being above all the SMAs all over again, and it's lagging. This is the shocking part of the whole thing, is that this is lagging. The other probably even more shocking part of this, given it's shocking in a way, but not that shocking if you step back. The other shocking part is that SMH is lagging. So this may be the critical thing as usual, that this leadership area, well, once the leadership area is back on its horse. If this doesn't get back on its horse, there could be a problem. If the SMCI situation sort of uh, folks start to think that maybe that applies to other names there, and there's a lot of uh, sleight of hand going on there. That could be a problem given some of the runs that these companies have had, their stocks that is, and the valuations they're currently at. And you really don't want to see this become a problem for the market, since the whole really, I guess, main driver thought wise seems to be this wonderful AI development that's going to enhance this, that, and the other thing, and really help the bottom lines, and it'll happen sooner than later. So it's been a few years, to say the least, since this was discussed, and I don't think it's delivered so far, but it could be on the verge of doing that. It could be getting closer and closer. I think the early hype was a great buy, and because we talk about that, it's if you buy early hype, you're usually rewarded. If you buy late hype, you're really risking some painful stuff. But at the bottom line is, technically this looks a lot like the Qs and XLK. And if they get this going again, that's a really big part of the whole situation, to get people excited that this whole sort of theme or thesis continues to work out. And it's sort of primed to go. You can see that is a milder pullback, and all it really needs to do is start to assert itself. But the other interesting thing is that the market has really kind of broadened out by bringing, we've been talking about this for a few weeks. Let's just make that case quickly. And I'll just mention, really, I don't want to mention all the ones that have. You can see a lot of these have. In fact, some of them have been doing so well that they're close to overbought, like XLU, XLI, XLB, right? XLP is overbought. XLF is overbought. So XLV is overbought. But former leaders, XLK and XLC, they're in the 50s on RSI, and they're stalling. So if they start to go, that's a big deal, right? Then you'll pretty much have nearly everything firing, except for, as I noted, XTN is well off the high still. And that's kind of a canary, just like IWM is a canary. Because if you're supposed to buy all the propaganda about how everything's so wonderful, which I just can't do, because I just see what's happening to so many folks. I'm not talking about it's wonderful on Wall Street. I mean, I'm more of a Main Street focused person, and I don't like that. What I'm seeing there for folks, it seems like it's a lot more of a struggle than is being led on. But anyway, that is a big telltale sign. I think that transports are still lagging, and another one that would be up here at XLE, still lagging. You would think, right, energy demand is going to be a big deal. But remember, we talked about the global sync up of easing, and that's coming. And so knowing that stocks try to anticipate things, then you can talk to whomever about how long. Some people think it's 9 months, other people do not. Some people think it's only a few months, whatever the case may be. But there probably is some degree of that. I would think you've got to acknowledge that. But yeah, this you would think would start to do better. It's really been a tough trader. We've had a couple little ideas here and there on both sides of the market, bull and bear, that may have done okay, but we just haven't had enough of a sustained momentum push to really get great trades out of that sector in UOA Pro. It's been little rinky dinkers in terms of profits, I think. But anyway, getting back to this, so most of these things look really good, which is another reason why it's hard, other than to say, well, the biggest problem is that they're short-term overbought. Okay, I'll go that far, but they're my point is in a basic way, most of them are acting really well. You've got a new high here. You're just off the highs in real estate, something I would have predicted with rates the way they are. I would have predicted the opposite, which is why I don't trade my opinion. I just trade the charts. XLF, you can see this whole column is up there. This whole column is up there. Here's more problematic down here. Discretionary perking back up would be a good sign. That hasn't happened yet. But yeah, overall, right, these are your main holdouts, excuse me, over here. And that's a problem. All three of those, especially these two as former leaders struggling, is problematic. Why is that happening? Are they just seeing outflows due to a rotation where there are a lot of these big success? What's happened there? A lot of the big successful. Let me see if I can get this to come up here. Big successful trades for some of these players. They're deciding, I'm going to rotate into something that's, because I think the economy really is. Why do I do that every time? The economy really is starting to come along. I'm going to rotate into other things. I'm not going to stick with what's been great and maybe is overvalued. I'm going to get myself into other things. So here's the mega caps. And the reason I save those for last is because they also may hold the key. And you could see that they're right in line in terms of their profile, their chart profile, compared to Qs, XLK, SMH. So everything looks very similar. So if I look at this objectively, right, and knowing that these are your big weights, these are your mega caps all strung together. If we look at where they ran from to where they ran to, and the pullback is just shy of 38.2, right? So that would still be a relatively milder pullback. It didn't come near there. It got near the 20 there in light blue above the 38.2 retracement. So that's really, in my book, a bullish pullback because it didn't really dip very far. In other words, the bulls were waiting for it, and so far they have not let it dip further than that. So they're really willing to come in at higher levels. And now with the close, which was sort of an engineered window dressing close at the end of the trading session on Friday, and what was just the second of two, I think, fairly difficult, boring weeks where if you had a few singles and an occasional double, you probably did really well because it just wasn't very good opportunities. There wasn't enough sustained momentum in any one direction for any time. So if you traded through that kind of noisy chop and you had a really good week, that's, to me, or weeks, that's really great trading. It's a lot harder, I think, to do that than when you just let your winners run, like a phase like this one. But you can see that this is so similar. So everything's really, to me, like everything's primed to go. The noisy stuff is maybe about to end. I don't know. Sometimes you don't get that at the very start of September. It takes maybe a week to really start getting serious once a lot of the other kids around the country finally go back to school after the Labor Day holiday. So we'll have to see if it does start to perk up, but it really is primed, I think, to try to go. It's no longer near overbought. They worked it back down towards 57 on the RSI. For them to take this high out, it would just be, well, one good session puts you there. So you won't be anywhere near overbought, and you could go back and attack this high. And the projections that I've got worked out say that if it does fulfill its destiny, if it gets through the highest, if it gets through sort of over here, where you're near the 50% with some of these, kind of like a flat line there at 2681. But I come over here and there's a lot of activity right near there, 89. These are kind of it's an artificial basket, but so I wouldn't, look at it that way. But technically, I still think you can chart it that way. And if the whole package lifts, I think you're going to 2885 if they can take the high out. So there's really nice push. And that's not even a crazy push. But I don't know, right? That's more of a longer term sort of snapshot in time right now. Obviously, it doesn't just go there in a shortened 4-day trading week in most scenarios, and that doesn't happen, but it all looks primed to go. And like I said, they've got the catalysts that are out there in the middle of the month to try to get excited about. Now, it's just a question of what happens, but what happens and when it happens, and do they try sooner or do they try later? But after 2 weeks of, I would say, fairly listless trading, I don't see why they really need to wait much longer if they want to really go. I think that was one of my sort of one of the curiosities for me is not, I was curious that we were not able to break out on SPY and try to at least print a new all-time high this week, because I thought they had a lot going for them. They kind of had kept the market nice and steady, not let it correct. Thought they would probably finish with a bang in front of the holiday weekend. Thought the NVIDIA EPS and stuff like that would help them, really kind of push further. They weren't able to do that. And that was, and I started thinking, and it's one of those, it's a very hard call type things because you don't know. You just watched basically the two worst weeks of the summer quite frequently, and which is often one of the most boring times of the year, other than maybe, the start of the new year can be boring at times, and also the finish of the year can be boring at times. But most of the time, trading's better than what we saw there in the second half of August. So I don't want to read too much into that. There could have just been a dearth of folks that cared, and they might have just tuned out and let me enjoy what's left of this little that's left of the summer unofficially. That could have been it. And so maybe that's, so I don't want to read too much into the failure to really go. I'd be surprised this week, again, news neutral, if they can't get this thing going. I'd rather trade this market as a bull. That doesn't mean I'm bullish, by the way. I'm just saying I'd rather trade it as a bull because there's really not that much in a lot of instances. There's not that much resistance in the way, where you can see how little price structure or price action is an overhang. You've got 2 points worth, roughly, not even, to the all-time high. So there's nothing in the way there. It's really just various types of projection methods of where the targets could be. And the diamonds are already there. That's what I'm getting at, that other than these things being overbought, the diamonds are a little more towards overbought, and some of the sectors that we saw are overbought. Other than that, there's really not a lot to complain about in the market. And you can see that, let's just use the diamonds to emphasize that point, right? We don't have flat lines on here. I don't have a bunch of fib retracements on here. And yet you can see that you've got even just this slope line, you've got all these SMAs that are on here. So all those forms of support will sort of create like a breaking factor without a dramatic news driver. So if you start pulling back, there's just a lot of reasons to find support because it's just waiting for it. It's just waiting for the pullback, the support levels that a lot of people will trade from, and maybe even getting like a gap closure if there's a real sort of surprising rug pull, come back to the 50, shake people out, then go again potentially. So you have a lot of sort of SMA and trend line and flat line and fib retracement congestion on the way back down, and there's nothing in your way on the way back up. I mean, on the way up, excuse me. So that's why I'd rather trade as a bull right now. If the market behaves that way, it would be, I think, it would be, they would basically, with hedge funds having shorted again and again and again, we found some reports that they're almost 2.5 years ago. You have to go back to find the level of shorting the hedge funds have recently engaged in, and as is often the case, you haven't seen this pullback, I guess, that they think is coming. And when they get that imbalanced, it can be short-term painful, and you could maybe ignite sort of a blow-off phase. This kind of blow-off top type development, which we've yet to see. So these are just all things I'm going on from memory that I covered on Friday, but I probably should take a look at some of the other points just to make sure I haven't skipped over anything that's main thing, but we were talking about waiting. I mean, other than being overbought, I would just be a breakout buyer here, and just be careful because you're already near overbought. You're at 68. It's good enough in my book to just say it's pretty much overbought already, because I'm not hung up on 70 or 30 or anything like that. But it's close enough, and you don't want to have this. They often do this new thing where, right, they pop it out like this is a great example. You could say, like, look at this high, look at these highs, and they pop it out and through. And if you overstay your welcome on that, once it gets overbought, like it did there, you can look down at your RSI. Then you get this kind of pullback to the level. So that's one scenario that I always have in my mind. I would keep that in mind, that if they do put a scamper together, and you get even further into overboughtness in the diamonds, you might see a pullback to these former highs. That would be right near I guess 412. So just keep that in mind. But if breaking down, you may as well use the 10-day right there if you're looking for a breakdown level. And that, I'll just talk about that. That's 411.30 right now. I'll go back to SPY, and we'll take a look at that more closely, because I think a lot of people just prefer that I cover some of these. I'm really trying to do a big, kind of like a big objective, just macro discussion, but some people like the levels that we trade from. I would trade the breakout here. I mean, this is not anywhere near 70. You're at 62, so it's approaching overbought, but not really there yet. So it's got room. I would trade that breakout, and just remember, again, false breakouts are a thing. So you're always being smart about your position management. But I think Friday's low. I don't want to, at this juncture, I don't want to start shorting this thing until I really see something that's going to tell me, yeah, there's really a chance that this thing's, they faked a breakout, and it was a weak fake, and they're just reversing right back down again. But remember, it's counter trend, so don't overstay your welcome. But it would be a different story if they popped it up for a few days really strongly. Then naturally I'd move a downside trigger for the counter trend trade up much more quickly to a much higher level. And that would probably be based off of intraday data at that point, because a couple of daily candles zooming up quickly isn't really going to be a lot of daily price structure to trade off of. But yeah, I would just trade the breakout. I mean, I'm expecting them to try and news neutral, and I don't know what's transpired over the weekend. I've been really busy with, as I said a long time ago, I've got so many things happening that that's why I started moving the recordings to Friday. Let's take a look at the IWM. And I think we'll just make sure we've got the levels on these, and I'm just going to look my notes over because I don't want to belabor this, but I'm sorry that the better, longer video didn't have any audio. It's just blanking, frustrating, to say the least. But yeah, so this is easy. I mean, I would trade Thursday's high, 221. And I think if in a bullish market, I'm not waiting very long. There's not a lot of room before you get to resistance anyway. That's going to come in near 225. I think that's where it gets pretty stout. I would always put the reminder in there. If you think it's right at, if you think the resistance is at 225 on the nose, it's a round number, so cheat it down to about 280, something like that. If you really want to get your quick flip in, do that instead of playing the game of, I'm at the figure with everybody else. Not a good game to play a lot of the time. And then if they buy you there, you don't want to sell, because that means it's going even higher. But that's it for that. And then I think pretty much the 10-day all over again. You may as well use that 217.26 10 SMA as of now. We'd have to do, again, this pops up. I'd have to go back and look at some intraday stuff to see where I think it would be a problem for the IWM to get below. And then finally, the Qs. This might be the Qs, the mega caps, SMH, XLK, all very similar, as I've spent time on. And to me, this is probably the best opportunity. So is there information in this, right? Is there, by the virtue of the fact that this is not participating, is that something we should be looking at? And I think it is. So I think you should need to keep your eyes and say, well, what's going on here? And again, is it just a rotation where there was so much success from the October lows in this area, and generally speaking, in tech, in semis. Uh, is it really more of, I think the economy and the world economy are going to start swinging the other way, so I'm broadening out and getting better values on things that have more immediate upside potential over the next 6 months to a year. It could be, and I'm just throwing that out there. I haven't read that. I'm just saying that's my thought process. Is this has just been more of a rotation. I don't know if that SMCI news, excuse me, if that is really a kind of limiting factor right now, that there's concern. I did hear some talk that this is, it's not unique to them. So that I believe that. I don't know if it's true, but I would believe that because I've seen egregious accounting shenanigans one too many times. Way back in I think the 90s was pretty bad, to be honest about that. But again, this thing is the laggard. This thing has the catch up potential. If they get this going, you know that if the big dogs and the mega caps that we talked about, if they start to rumble higher, it'll be fairly easy to print in a news neutral environment. It'll be fairly easy to print new all-time highs, and I think it would be fairly easy for this thing to catch up. And I'm sorry, come back, and then potentially catch up even more so. But it would definitely be easy for it to come back towards the here if you get the big dogs going. So I would just use probably Thursday's high there in the Qs, which is about 478. If you want to trade the downside, that's a little tricky because there's really, I'd probably have to look a little bit more at that. Yeah, I hate to say it, but I think you probably have to use Wednesday's low, and that's down there. So I hate that, but it's near 468. That's just and unfortunately, like I said, same old point I've been making, but rather trade it to the upside because not a lot, only a little bit above 487. It's even there in the price action, and you could get the vacuum kind of suck in effect, gravity effect of going up towards closing this gap, and then the all-time high just getting pulled towards that. And then there's nothing, of course, but projections from that point on. So that really looks good. I think to me, if I'm objective, there's just no doubt that these charts look quite good overall with a lot of potential because of so many important big dogs that are lagging. And let's see if this is the right one. And it is the right one. And here's our quick market breadth look. This is the screen I usually share. And I don't even want to go into all this. It just, the point is, if you look across here, overall, this is bullish. Virtually everything on here is bullish or confirmational. There's really nothing that's saying, oh, glaring problem flashing right here. Could it be better? It could. We've seen it better. Could every single sector be rallying other than the few that we noted that are currently not rallying and strongly? Sure. But it's rare that you get everything working perfectly. It's not normal and not frequent. And when you do that, you almost need to start thinking the other way and saying, is this too good? We've done that, and it's, I think, helped us when before we saw corrective activity. I think we said it rarely gets much better somewhere right near this top. And that's the truth. When you see that it gets so wonderful, you got to be careful. It's almost too easy. And that's what I said last week too, on Thursday morning. I just said this market is starting to worry me a little bit because it's looking too easy. One of the webinars that we had, just it looks so good. Just needs a few more things to join the party. XTN, XLE, and then the big dogs. This thing could really start to go in a bigger way. And it's right in the face of what you'd expect. But remember, these guys think that easier money, lower rates is the tonic. I don't know. I think that'll help, just like I thought higher rates would hurt. But to me, I don't know if you're in a situation. I think you're already in a tougher situation than coming down 50 basis points really lights a fire under a lot of people and companies. I think it's it's going to take a lot more than that for that to happen. And the other factor that I haven't talked about before I start to wrap up is I think you've got to be just on guard. I think it's going to take news to knock this market on its ear, as of the way the technicals look right now. So if you told me there will be no bad news hitting this market, I think until you get to the FOMC and Apple, they're going to the preponderance of bulls will outnumber the preponderance of bears. You'll just have more bullish action. That's the incoming trend, right? That's after we've seen some corrective activity, right? The bulls have returned and returned and returned. And so that's really the trend. It's the longer term trend. It's also this sort of short intermediate term trend, that the way that I'm looking at it. And so the natural assumption is that the bulls, after the bears have stepped in and done their thing, and some weak bulls have been chased out, the trend resumption, right, is there, and you start going again, or at least you try to, and that would be it. I would just be sticking with that. That's what I would stick with. So I do think it's going to take some sort of a news event that is not highly focused upon right now to really upend the market. And that's at this juncture. I could have something happen that would change my mind literally on Tuesday morning when we reopen. But as of right now, that's what I think. And we've said that type of thing for a while. And I do think there still is more to the volatility storm. I think the volatility storm is going to continue this fall, but we're kind of have been in the eye of it now for a few weeks, where they chilled things out. And that does really mean to me that the typical summer conclusion scenario played out. It shouldn't really be surprising to us. You can't really bank on news hitting, especially in the late summer. It's often that kind of the period we just had. And you can't even bank on news, to take things down. And when that will come, it's very hard to trade. And that's why if the VIX does drop further, I'm sorry, not even if it drops further. If it drops further, I'll be more aggressive. But I'm planning on getting myself involved with more stuff, including more longs in the metal space, and different types of downside put butterflies and things like that, that Ryan can cover in a webinar, that I would say, if you've got the chance and Ryan has the time, or Greg, it's something really just great to bring up. So I would say, look, if you can try to guess at some of those points that are on this week's, that maybe you took a screen cap of, that are on this week's summary screen, please take a look at that. I'm sorry that this is sort of a haphazard re-recording, but I've got a lot of stuff I've got to address today, and I've got to get on the road for that. And unfortunately, the original video, which was, I think, much more in-depth and point by point, that video does not have any audio for some unknown reason. So I had to do a quick sort of re-recording. I do want to just mention that I did mention the big time potential in IWM, but the other one, if you're new, the other one to me with massive potential is here. And I don't know what this portends. I don't think it's good things. Hopefully I'm wrong. But if this big sort of situation fires in gold, and you could see that there's this massive sort of cup and handle type pattern that's in place that we've been focusing on and sort of using as the base to be bullish for ideas to come in, that this is fired and it's moving up towards, right, these upper levels of these projections we had a while back ago. But this really does portend quite a large move. You're looking at a really about, if you do the old 100%, 100% from the top of the cup type of projection, it puts you at about 260-ish. So that's just a common sort of default projection from a pattern, and just a ballparking of that as it is. That puts you to about 260. So there's still maybe some more room there but something this big could certainly move up by a lot more with the type of things that's happening. I think the BRICS news has just been ignored for a long time, as if it's not potentially really going to impact things. And I just have the sense that because of all the shenanigans that have played out over time with the dollar, that that's going to be a bigger problem, is my gut take. And I'm not an expert on that at all, but I just have this feeling that people continue to ignore that a lot of the rest of the world has had it with the dollar and the shenanigans associated with the dollar, and really, well, mainly, right, the devaluing of the dollar for all these holders of the dollar. And look at us too, as American consumers, getting smashed because they continue to destroy our purchasing power, that type of thing. And no one really likes that. No one should like that. I can't blame them. I absolutely despise it and have for, since I was a kid and someone explained it to me. But bottom line is that, yeah, that's frustrating as hell. And I don't think you can underplay or underestimate what could happen if the dollar is no longer the dollar that we've known for so long and not taken as seriously, and sort of marginalized to a degree. So we'll see on that. But I would definitely consider that question with Ryan. Just my final reminder. Yeah, Ryan has time. He can walk you through some things in net long puts, all these different techniques you can use to get yourself positioned so that if there is something that does develop, you have a plan at least to go to it, or you maybe even have something on. I'm planning on buying some VIX calls as part of what I'm doing as well. So just wanted to throw that out there. So my hope, as usual, with all my hedging is that it was unnecessary and other things worked better. And we're on on our way to another, bull market that's a global one where we've got some really good action and economies are doing better and things are picking up. But if that's not the case, it could be pretty rough stuff, I think. And that's why I'm going to be hedging. So on that note, I'm going to wrap up. My apologies again for how I had to jump around and just do a best efforts thing here to try to cut this down. But I do have to get on the road here in about 2 or 3 minutes. So I knew I'd never get the hour and 10 or 15-minute video done the way I did originally, but this is sort of just makeup. So hope that you get something out of this week's video. I hope everyone had a wonderful and safe holiday weekend. Get ready for the markets tomorrow morning, bright and early, with our first webinar. And thanks for tuning in. Everyone, take care.